Welcome! In this video, can ZBCN coin increase by 50% very soon? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The descending trend observed on the price chart is a highly critical structure in technical analysis and stands out as a significant factor in investors' decision-making processes. A descending trend fundamentally shows that the price is making lower highs and lower lows over time. This structure indicates that sellers are generally dominant in the market, buyers are weak, and as a result, the price is being gradually pushed downward. Such trends are usually seen during periods when investors act cautiously and market sentiment is negative. However, the break of this descending trend, meaning the price moves above the trend line, can signal a major shift. The break of a descending trend often sparks hope among investors, because this breakout is interpreted as a sign that sellers are losing strength and buyers are beginning to gain control. For many technical analysts, the upward breakout of this line signals the beginning of a trend reversal. At this point, the potential for a change in the direction of price movements is quite high. Such breakouts offer new buying opportunities to investors, as it is believed that positive momentum is entering the market. Especially if this breakout is supported by increased volume, meaning a high amount of trading activity, it is more confidently accepted as a real and not a false breakout. The broken descending trend line often becomes a support level for the price moving forward. This is a situation referred to in technical analysis as a role reversal. A line that previously acted as resistance can now take on the role of support. This gives investors a strong sense of psychological confidence, because when the price approaches this support level, it is expected that buyers will step in and push the price back up. Therefore, such a breakout can signal not just a short-term rally, but also the start of a long-term trend reversal. Of course, not every descending trend breakout leads directly to a strong uptrend. At this point, certain technical filters and confirmation signals are looked for. For example, momentum indicators like RSI are checked for bullish divergence. If the RSI is making higher lows while the price is making lower lows, it indicates underlying bullish potential. When this condition aligns with the breakout of a descending trend, it suggests that the price may be preparing for a significant rally. Indicators such as a bullish crossover on the MACD, rising volume, and staying above key moving averages like the 200 EMA are also among the structures that support the descending trend breakout. Additionally, the break of a descending trend is also a psychological turning point for investors. Investors who have seen the price moving downward for an extended period typically assume the downtrend will continue. As a result, rallies are often perceived as temporary. But when the price breaks the descending trend, it disrupts this belief and increases confidence in a potential uptrend. As this confidence grows, new buyers enter the market, which pushes the price even higher. Especially professional investors who trade based on technical analysis view trend breakouts as high-priority buy signals. This can collectively push the market in an upward direction. In some cases, the break of a descending trend can also trigger what is known as a short squeeze. This occurs when investors holding short positions are forced to buy to close their positions, causing the price to spike sharply. This squeeze move is one of the main reasons behind the rapid price increases that often follow descending trend breakouts in technical analysis. Therefore, a descending trend breakout is not only technical, but also psychological and strategic. It can trigger position shifts among short-term market participants. Finally, the break of a descending trend is not limited to just the price chart. If this breakout is also supported by fundamental analysis, such as positive project news, partnerships, developments, new investor inflows, or general market optimism, it can initiate a much more sustainable and powerful uptrend. For this reason, reading descending trend breakouts by combining technical and fundamental analysis helps investors make safer and more accurate decisions. But we can't base our analysis solely on trends. Let's take a look at the other metrics as well. Stay tuned. The MACD indicator is a widely used and highly valuable tool in technical analysis, preferred by investors to understand the strength and direction of a trend. This indicator provides critical signals in confirming both upward and downward trends while analyzing the momentum behind price movements. When the MACD lines are rising, it is generally interpreted as a positive signal that prices are likely to continue climbing. This upward movement indicates strengthening momentum in the market and shows that buyers are becoming dominant. This information is extremely valuable not only for short-term traders, but also for medium and long-term investors. The MACD indicator consists of two main components, the MACD line and the signal line. The MACD line is a graphical representation of the difference between the short-term and long-term moving averages, typically calculated using the 12-period EMA and the 26-period EMA. This line allows a comparison between short-term momentum and long-term momentum. If the short-term EMA rises above the long-term EMA, the MACD line moves into the positive zone, indicating a bullish price trend. The more clearly and consistently this positive territory is maintained, the stronger the uptrend is assumed to be. At this stage, the upward movement of the lines indicates strong buying pressure in the market. The signal line is typically the 9-period EMA of the MACD line. This line is a smoothed version of the MACD and helps filter out sudden changes. The signal line moves more slowly compared to the MACD line because it is based on longer-term averages. The relationship between these two lines is crucial. When the MACD line crosses the signal line from below, it is interpreted as a buy signal. Conversely, a cross from above to below can be seen as a sell signal. However, our focus is on the simultaneous upward movement of both lines. This upward alignment and increasing positive difference between them confirm the bullish trend. As the MACD lines rise, the histogram bars typically follow this movement. The histogram is a bar chart that shows the difference between the MACD line and the signal line. If the histogram bars are growing above zero, it means the gap between the lines is widening and that the MACD line is pulling away from the signal line. This divergence generally signals that market momentum is accelerating and the uptrend is gaining strength. Therefore, when both MACD lines are trending upward and histogram bars are growing on the positive side, this is considered a highly favorable technical setup for investors. This setup also indicates the prices are likely to continue rising. Such MACD uptrends on price charts typically signal the beginning of a new trend or the strengthening of an existing one. Especially after a prolonged period of sideways consolidation, the upward movement of MACD lines can be a strong signal that a new upward move is starting in the market. For this reason, rising MACD lines are seen as a turning point in technical analysis. This shift can lay the foundation not only for a sudden price spike, but also for a more sustainable and structural uptrend. Another key point investors should watch is the slope of the MACD lines and whether the distance between them is increasing over time. If the lines are rising in parallel and the gap between them is widening, it indicates that the market is gaining strong upward momentum. These kinds of MACD uptrends, especially when supported by high trading volumes, suggest that prices are not just temporarily rising, but that the market is in a serious structural bull phase. In such situations, it's more reasonable for investors to hold their positions longer and stay in the trend until it plays out. In the cryptocurrency markets especially, an upward move in the MACD indicator can signal a powerful rally. Because of the high volatility in these markets, the signals given by technical indicators can quickly turn into sharp price movements. As the MACD lines rise, investors become more motivated not only technically, but also psychologically, as this pattern reinforces investor confidence. Growing confidence generally attracts more buyers into the market, which in turn pushes prices even higher. In this way, the rise in the MACD can lead to a broader bull move through a domino effect. The MACD indicator is an excellent tool, particularly for trend-following investors. The simultaneous upward movement of the lines provides clear insights into both the direction and strength of the trend. For this reason, investors should pay attention not only to price, but also to the direction, slope, relative position of the MACD lines, and the movement of the histogram bars. Interpreting all these components together helps make much more accurate and reliable buy-sell decisions. In conclusion, the rise of the MACD lines is not just a technical signal, it is also a strong indicator that market participants are heavily leaning toward buying, that upward momentum is strengthening, and that the market holds positive expectations. Therefore, this kind of upward movement should be closely monitored by investors, evaluated along with supporting signals, and used to form appropriate positions. Especially if the upward movement of the MACD lines is accompanied by an upward reaction in prices, this is a strong signal that positive price behavior can continue. If the lines rise, the price will rise as well. The small cub formation observed on the price chart is a significant structure frequently encountered in technical analysis and is generally interpreted as a bullish signal. Such formations represent the evolving perceptions of market participants over time, the restructuring of the supply-demand balance, psychological thresholds, and a period of consolidation during which the price gathers momentum.
Small cup formations typically behave like miniature reflections of larger cup patterns, but they are completed in a shorter time frame and often result in more dynamic movements. In this context, the formation's development, completion, and subsequent retest phase are extremely important, as these stages demonstrate that market behavior follows certain patterns and mark strategic decision points for traders. First, it's important to understand how this cup formation developed. The price initially declined slightly from a certain level, then the drop stabilized and the price began to move sideways. This sideways movement generally represents a period in which buyers and sellers are balanced. Investors are trying to interpret the market's direction and uncertainty prevails. During this phase, buying pressure begins to increase and the price moves upward again. As a result, the price reaches the previous peak level, completing the formation. This structure is a classic cup formation. The fact that it formed on a small scale may indicate that the price has emerged from a short-term consolidation phase and is signaling the early stages of a potential trend that can be examined on larger timeframes. One of the most critical stages following the completion of the formation is the retest or the pullback movement. After the price breaks above the cup's peak level, it often tests this level again. This test is important both to confirm that the previous resistance has now become support and to eliminate weak hands from the market. During the retest, panic selling can occur, but if the price bounces back from this level, it shows that buyers are in control and the trend is strengthening. In technical analysis, this behavior is explained by the principle of former resistance becomes support. In other words, a level that was once a strong barrier is now seen as a buying opportunity once the price breaks through. This is a very positive signal for the continuation of the uptrend. In this particular scenario, after the completion of the cup formation, the price has broken above the peak and is now undergoing a retest. This retest phase is a period when new investors look for opportunities to enter positions and existing holders gain renewed confidence. If this level is successfully tested and the price regains upward momentum, a price movement equivalent to the height of the formation can technically be expected. The target in this case is an upward price movement equal to the depth of the cup, which corresponds to approximately a 50% increase. This target is a valid projection according to technical analysis theory, because investors often build strategies based on the geometric structure of the formation, and algorithms tend to recognize and trade based on such patterns. A 50% target implies a significant increase compared to the previous price level. This holds serious significance not only from a technical perspective, but also in terms of investor psychology. When a technical signal suggests a potential 50% price increase, market participants tend to make bolder purchases. This confidence boosts market momentum and intensifies buying pressure, paving the way for prices to reach the target faster and more decisively. Such targets can present valuable opportunities not only for traders but also for long-term investors, as high potential gains are often achieved through formations identified at early stages. Additionally, the depth of the cup formation generally reflects the strength of the prior pullback. A deep cup symbolizes recovery after a strong drop, while a shallow cup indicates a short-term correction. In this scenario, the cup is small but technically well-defined, and the subsequent retest movement is clearly visible. This suggests that the price movement is unfolding in a structured and technically sound manner. This is reassuring for investors because it makes decisions like when to enter a position, when to take profits, and where to place stop-loss levels more clear and strategic. Looking at the psychological aspect of the formation, cup patterns are essentially a process of recovery and preparation. The price consolidates for a while, market participants adjust their positions, and then the market gains strength and accelerates upward. That's why cup formations are often precursors to strong and sustained uptrends. Especially if the retest that follows the formation is successful, the price may not only reach the technical target, but also break through psychological resistance levels, opening the door to even larger gains. Achieving the technical target increases investor confidence, which in turn expands trading volume. This new energy, fueled by volume, may lead to a more prolonged and sustained uptrend. In conclusion, the cup formation and the retest that follows provide strong signals in technical analysis. In this scenario, a price increase of approximately 50%, equivalent to the depth of the formation, appears technically possible. Of course, there are no guarantees in the market, and like all technical structures, cup formations can fail due to other influencing factors. However, when analyzed properly and monitored closely, such patterns can work in favor of investors with a high probability of success. The retest movement following the cup also serves as extra confirmation that the structure is valid and healthy. Therefore, the formation of such a technical pattern can be a major opportunity for both short-term traders and medium to long-term investors, especially since these types of formations indicate that the market is likely to move upward in a calm but steady manner. They rank among the rare technical structures that should be evaluated strategically.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.